updating our story from earlier in the program that someone or someones had been taken into custody by Chicago police related to the Ariana Preston murder over the weekend, confirming that is true, that one person was taken into custody by SWAT in the early morning hours.
Yeah, SWAT arrived at the Southside home at 8:30 p.m. At 10:30, they breached the property, and then they said at 3:30 a.m. somebody walked outside with their hands up into the street and surrendered.
This was in the Auburn Gresham neighborhood. The murder happened in East Chatham. Yeah. Neighborhood. So anyway, we'll continue to update as we get more information related to the murder of Chicago police officer Ariana Preston, but at least we know one suspect is in custody. Okay, so turning our attention to the markets after Friday's better-than-expected jobs report and our conversation with our friend James Perry from Perry Capital on Friday. So here's the thing. Labor demand exceeds labor supply, and that demand pressure gives us wage pressure, and that wage pressure gives us inflation, which is on the rise. And the Fed chairman says we need to reduce labor demand to reduce inflation. This is not my belief system, but it's his. He's the Fed chairman. I am not. He essentially believes there's a trade-off by his policy choices. There's a trade-off between employment and inflation, which the Reagan administration disproved by, the reality of the 7 fat years. But nonetheless, that's what he believes. We have to throw more people out of work in order to reduce inflation, is the posture he's taken since he started raising rates. So why does the market react positively to a hot jobs market when you have the Fed chairman saying, I'm going to continue raising rates until the job market cools off? I'm a bit perplexed. To help us understand that, and if I'm right to be perplexed, I suppose, pleased to be joined by our friend Scott the Cow Guy Shellady. There it is. Scott the Cow Guy is, of course, a market specialist for Market Day Report. That's 10:30 a.m. To 1 p.m. And also the host of the Cow Guy Close. That's 1 to 1:30 p.m., both at RFD-TV. Scott, can you help alleviate my confusion?
Well, to some degree I can, because we also had Apple earnings come out Friday, and the market really liked that as well, even though if you really kind of look under the hood, their wage growth was basically in line with inflation. But the market was kind of trying to take a sigh of relief after we kind of had a couple of difficult days last week. So when you come in and you've got Apple, which everybody had expected, they knew all eyes were being looking at, and at the same time we didn't have a disaster of a jobs report. The young 30-somethings that managed too much money thought that would be a good thing, and if it took the market higher. It didn't erase the losses that we had the previous 2 days, but you're right to be a little perplexed, because it doesn't make sense, especially when you've got what you said, Chairman Powell saying that, which I think is criminal, by the way, because he's the one that let inflation get out of control in the first place, and now to fix his mistake, he has publicly stated he's going to put people out of work to fix his mistake. I can't believe I hear that when he says that, but that's the case. So Friday's I think it was a false flag. What folks didn't see is that they revised the previous 2 months down by 30%, and they'll probably revise Friday's number down as well. And so we've also got declining earnings when it comes to some of these tech companies that are also reporting their earnings right now. I don't see a lot of good, but I guess the market just on Friday felt as though that they dodged a bullet somehow with better than expected earnings from Apple and jobs report that wasn't a disaster.
But then don't they have to recalibrate their expectation, even with those revisions down, recalibrate their expectation on what Jay Powell's going to do with interest rates, which it seems to be the only thing the market cares about, is one more 25 basis point hike, and then that's it. Well, not if jobs numbers keep coming in like this.
No, you're right. I publicly went on my show on Friday saying, this should have been a negative. This should have been something that came in hotter than expected. This should have been something that should have given everybody concern that, oh my gosh, we're going to have another 0.25% rise in the next meeting. That's exactly how I read it, but the majority of the market took it as we dodged a bullet somehow, which I don't agree with, but that's how good traders make money, is they can judge the temperature of the market, and there's not a lot of folks that are involved with the market that much anymore, Dan, that have a memory. And sometimes, as my father would say, in this business, having a memory is a bad thing sometimes. And so, look, this economy is on very shaky ground. We have we've had great returns in some of these stock markets, but only because there's 500 stocks in the S&P, and most of the 10% of the gains are from 2 or 3 or 4 of the stocks.
That's the other thing too, and it's the same thing. Same thing with Nasdaq. I mean, the up is concentrated. Most of the equities have been losers this year.
Yes, and so that's another bad thing. And then when you start to see, I also think that with this ChatGPT stuff moving in, you saw this job openings number come down by a lot, from say 10 million to 9 million. We still have 6 million people looking. But I think that people are pulling their ads from papers when you have the head of IBM saying we're not going to hire 8,000 people that we thought we were going to hire because we think a lot of this can be done by ChatGPT. I mean, those things are starting to eke into the market. And I publicly said this as well. For all those folks out there that wanted to sit on mom's couch in the basement waiting for that $16 an hour job to make it maybe go to 20 or 20, and that will get you out from underneath your Call of Duty. Well, you might have just overstayed your welcome, because we've got 3 McDonald's in America now where they don't have any human interaction at all whatsoever. It's 100% automated. And now you've got ChatGPT coming on, and that's going to really take care of a lot of those other jobs as well. So the market's about to go through some tectonic shifts here. I'm not going to overplay that, because I think that there are some really good things about AI. But when it comes to jobs, it's going to be difficult for some.
Oh, wait, what's good about AI? What are some good things? I mean,
I think it would be
the medicine field, the field of medicine.
I think it'll be great for medicine, yeah. I mean, I think that's one of the things it can be great for. I think you're going to be getting instantaneous answers to a lot of things that you couldn't really normally do before. So if you got a room full of, the best way it was explained to me, if you have a room full of 1,000 people, whatever each person learns is shared with those other 999 people instantaneously. That's going to be pretty good for some of the stuff that we need to have a lot of data about. So, yes, it can be very dangerous, but at the same time, there's also going to be some good things to it. And as well as the Internet's been very dangerous, right? We've been able to have people shut down companies and stop, take your lights off and power grids and the likes. But there's also some great things that it's done. So we're just going to have to deal with all the growing pains with it. But I think that if it's done right, it can actually have some positive things. But undoubtedly, it will take away jobs. And I also, this is another one I think I absolutely said before as well. You've got in Amsterdam and in Vegas, you've got brothels that are 100% AI, or artificially, they're robots. So if we can put the world's oldest profession out of business with technology, everybody's got something to be worried about.
I did not know. I've been down there to the Red District. Seriously, they're animated?
You haven't been to a brothel in a while, it seems like, Amy.
I haven't. Yeah. I had no idea.
Yeah. You got to get up to
Cuts
speed.
down on venereal diseases, I guess.
Wow.
Oh,
boy, that really is a great economic insight, Scott the Cow Guy. That's thank you for that.
So Dan got out of the market a while ago. When should he get back in?
I think you're going to get a better chance. The market, I think, has got some big-time bumps coming ahead. And, and look, there are some people out there that think that they know what they're doing, calling for interest rate cuts. Some, maybe 1 or 2 by the end of the year, and maybe, depending on how big they are, 150 basis points to 200 basis, which would be 1.5% to 2% off of, next Christmas, December 24. I think that's insane. But if those people are right, that doesn't mean they're cutting rates because things are great. That means they're cutting rates because we've had some sort of calamity. I had a guest on my show, and I think he summed it up great. He says the bond market, but by the way, is bigger than stocks. There's more money involved with bonds. The bond market is telling us, there's a train wreck coming, and the stock market could be explained as 2 little kids playing on those train tracks. Okay, so that's how he feels about what's in front of us. So you're going to get a better chance to get stocks. I feel pretty confident about that.
And going back, 3/4 of our economy is service sector. It's not manufacturing. And so thinking about those ma and pa service sector businesses that you were referencing, so in the McDonald's example. So we're in a situation now where the mom and pop restaurant has to pay, this fiat wage that the government has set, but they can't, and also is dealing with increased prices on the goods end, right? The wholesale end for the food they buy and so on and so forth.
Right, commodities.
Right. So they have to pay this, and then they can't upcharge the increased costs that they're experiencing, because the people who play by the rules, who patronize these these establishments, they're not seeing real wage growth. So you have the situation where the restaurant is taking a hit to protect its customers who can't afford the hit, so that we all can pay for people who are on the sidelines. Is that right?
Well, you summed it up very well. I mean, when the CEO of McDonald's came out last week, I think it was early last week, and said that he could already see people moving down the value chain in his restaurant, but they're not selling, that cheeseburger for the road that you bought so your family doesn't know you had two before you get home, right? I mean, those types of add-ons are going away, and he said they're going down the value chain, ordering cheaper meals, and so that's actually happening at McDonald's. But at the same time, Darden restaurants that would be considered up the chain from that are starting to see their stock sliding, because they're seeing customers move down the chain to McDonald's, and then McDonald's guy says they need moving down their chain internally. So yeah, that's absolutely happening, and so I feel it's a war on middle class business. So Dan, because starting with the pandemic, if you didn't have a drive-through, you're out of business. But Home Depot and Lowe's, they got to stay in business, but you got slammed and got out of business. I mean, think about all those places that you visited with your parents at some point in time in your life that had, advertised they've been open for 150 years. Some old restaurants maybe in New York, Washington, Boston, maybe even in Chicago too. I mean, that meant that those people were all open during the last pandemic. But we had a lot of people go out of business because they couldn't afford to be shut down for 9 or 12 or even 15 months. But we forced them to go away, and that was another great reason why you've got this bigger disparity between rich and poor. I mean, we spawned 40 new billionaires over the pandemic. That doesn't sound right to me. So
yeah, right.
I'm still angry about everything that happened to the small businesses there, because now, and the government doesn't have to say, they can wave the flag that we didn't raise wages. Well, no, they didn't make the government mandated wage go up, but they helped everybody else put it up to $25 an hour, so that those poor people went out of business because they couldn't pay. They can't pay for their people, and so I think it's a pretty sad state that we're in. That mom and pop shops got hurt the worst, and they continue to get hurt the worst. Their inputs going up. They can't charge for it in the end, like you said. They can't afford to get people. I mean, there's nowhere to turn. Jim Muriel is a great example, and you should talk to him about what it's done to the restaurant landscape from his point of view. It's very telling.
Yeah, we have.
Yeah.
Debt ceiling. The political class is in the midst of debt ceiling theater, and the left in particular is warning that cats and dogs will be living together if they don't get a clean raise in the debt ceiling. What's the market's position on the prospect of a default and the implications if Republicans and Democrats can't come together to continue spending?
Well, I mean, if markets people would say that the chance that you don't raise the debt ceiling, or no, the chance of you defaulting on our own government paper is probably as likely as the sun exploding, because that's just not a risk that the U.S. could suffer. Because if our debt gets downgraded significantly, it was downgraded once before when we pushed it to the limit. It just makes our borrowing costs go up like anybody else with bad credit, right? But I mean, to default on our own bonds would be unthinkable, and they keep waving that around like it's an actual outcome, but it can't be. So also, you can't have a divided house and say that I'm not going to negotiate either. I mean, divided house means you have to negotiate. That's just the definition of having a divided house. So that's not very good, playing very good cards either. So something will happen at the last minute. Because it has to, because we can't default on our debt.
Scott the Cow Guy, Shellady, market specialist for Market Day Report, 10:30 to 1 p.m. The Cow Guy Close, he hosts at 1 to 1:30, both at RFD-TV. Scott the Cow Guy, thanks as always.
All right. All right, guys, have a great day. Have a great week.
Thanks, you too. And he joined us on our turnkey.pro answer line.
The more you listen, the more you'll know. This is Chicago's Morning Answer. Morning Answer on AM 560. The Answer.
When it comes to remodeling your home, are you picky, fussy, persnickety, particular, demanding, and just downright hard to please? Do you value quality over speed? Getting it done right over just getting it done? Well then, Mr. and Mrs. Persnickety, do yourself a favor and check out Forever Remodeling. That's the number 4everremodeling.com. To call us perfectionists would be understating our attention to detail. If you said we were OCD when it comes to creating spectacular kitchens, bathrooms, basements, and additions, we'd be guilty as charged. Forever Remodeling takes the time to meticulously get the job done exactly right. So if you're a stickler for details, if your standards are ridiculously high, then check out Forever Remodeling. We can promise you a best of the best of the best